Oil prices on Wednesday stood at their lowest point in more than 3 months. That's over concerns of waning demand in the U.S. and in China. We spoke with NTD Business host Don Ma for details. Don Ma, thank you so much for joining us.
Yeah, great to be here as always, Tiffany.
To begin, why have oil prices come down? Is the conflict in the Middle East not a concern anymore?
Well, Tiffany, I've said this before at the beginning of this conflict that if it was contained between Israel and Hamas and that it didn't spread to other countries, that investors wouldn't be too worried about it. And I think that's what we're seeing now. The market is clearly less concerned about the potential for the Middle Eastern supply disruptions. In fact, I think we can say for some investors, at least, that there's actually a sense of confidence that the war in Israel and the Gaza Strip is not going to impact supply.
And what are investors shifting their attention to now?
Well, there's a number of moving parts here that's involved, and one of them I think that's having an impact is supply. U.S. crude oil inventory rose by about 12 million barrels last week, some sources said, citing American Petroleum Institute data. U.S. oil production is steadily ratcheting up. In the first week of November, for example, U.S. crude oil production hit 13.2 million barrels per day, which, by the way, is a new record. So there's a factor over there. Another factor is that, according to the U.S. Energy Information Administration, petroleum consumption will actually fall by 300,000 barrels per day. So essentially what you have here is a situation of increased supply and reduced demand. So, I mean, of course, that's weighing on prices. But there's more here. The world's biggest crude oil importer, China, is seeing the country's total exports of goods and service contract faster than expected. And this is also feeding worries about oil demand. And just one more thing I'll mention here is there's concern about the global economy as well, hitting a potential roadblock going forward.
And how is OPEC's production cuts factoring into all of this?
So Saudi Arabia said it would extend its voluntary production cuts of 1 million barrels daily of crude until the end of the year. And some are saying that perhaps this is a tacit admission that crude oil demand isn't as strong as OPEC has been expecting. But the bottom line here is, Tiffany, that the U.S. production is a big factor that we can't overlook in terms of global markets. And the same goes for Chinese demand, and both are currently developing in a way that would favor lower prices.
A lot of moving parts here, Don Ma. Thank you so much for joining us.
Yeah, thank you.